Picture this. You're at a store, eyeing a product you've been wanting for a while. But then you glance at the price tag. It's expensive. You hesitate. Here's where you need to remind yourself of a quote by the legendary investor, Warren Buffett. Price is what you pay. Value is what you get. It's not just about the number on the price tag. It's about the value that you're getting in return. Will it last? Will it serve its purpose? Is it worth it? This is the essence of investing. It's not about buying a stock because it's cheap. It's about understanding the value that lies within. This quote encapsulates Buffett's investment philosophy. He doesn't buy a stock because it's cheap. He buys it because he sees value in the company, value that others might have overlooked. So as we dive into our countdown of influential quotes from successful financial investors, remember, it's not about the price you pay, but the value you get. Picture this. You're about to invest in a company, but do you really know what that company does? Here's a quote from Peter Lynch, a successful investor and fund manager. Know what you own and know why you own it. This quote emphasizes the importance of understanding your investments. It's not enough to just own stocks. You need to know why you've chosen those stocks over others. You need to understand the company, its business model, its competitive advantages. This understanding comes from research. Lynch's investment philosophy is all about research. He believes in understanding a company inside and out before investing in it. So as we continue our countdown, remember, it's not just about owning stocks. It's about understanding them and knowing why you've chosen them. Imagine you're at a buffet. There are so many dishes to choose from, each one looking more delicious than the last. Would you fill your plate with just one item, or would you try a little bit of everything? Now think of that buffet as your investment portfolio. Here's a quote from Ray Dalio, the founder of Bridgewater Associates, one of the world's largest hedge funds. Diversify well, because we don't know what the future holds. This quote highlights the importance of diversification in your investment portfolio. It's not enough to simply invest in one type of asset. You need to spread your investments across different types of assets, industries, and geographical locations. This helps to reduce risk and increase the potential for returns. So as we move forward in our countdown, keep Dalio's advice in mind. Don't put all your eggs in one basket. Diversify your investments. Let's step back in time for a moment to the bustling stock market floor of the early 1900s. Picture a man, cool and composed amidst the chaos, observing the market trends with a discerning eye. This is Jesse Livermore, one of the most successful stock traders in history. He once said, "The real money is not in the individual fluctuations, but in sizing up the entire market and its trend." Livermore's quote emphasizes the importance of understanding the bigger picture in investing. It's not just about the day-to-day ups and downs of individual stocks. It's about recognizing overall market trends and making strategic investment decisions based on these observations. So as we continue our countdown, keep Livermore's wisdom in mind. Don't get lost in the details. Focus on the larger market trends. Next, we turn our attention to George Soros, a man whose name is synonymous with hedge fund success. Soros is known for his theory of reflexivity, which suggests that markets are not always efficient, but rather are influenced by the biases and misconceptions of traders and investors. He famously said, "The financial markets generally are unpredictable, so that one has to have different scenarios." Soros reminds us that the market is not a perfect system, and it is unpredictable at best. This unpredictability, he suggests, necessitates having multiple strategies at the ready. As we navigate the world of investing, it's crucial to remember that the market's imperfections can create opportunities for those prepared to seize them. Moving on, we delve into the wisdom of Benjamin Graham, often hailed as the father of value investing. Graham was a mentor to Warren Buffett, and his investment philosophy has shaped the strategies of many successful investors. His quote, "The intelligent investor is a realist who sells to optimists and buys from pessimists," emphasizes the importance of emotional control and discipline in investing. Graham's perspective teaches us that the market's mood swings should not dictate our investment decisions, but rather provide us with opportunities. It's about being a realist in a world of market mood swings, buying when others are overly pessimistic and selling when they are overly optimistic. Next, we explore the insights of Charlie Munger, Vice Chairman of Berkshire Hathaway and longtime business partner of Warren Buffett. Known for his wit and wisdom, Munger has provided some of the most valuable advice on investing. His famous quote, "The big money is not in the buying and selling, but in the waiting," encapsulates his philosophy. Munger emphasizes the importance of patience and discipline in investing. He suggests that investors should resist the temptation to make frequent transactions and instead wait for the right opportunities to come. This aligns with the principles of long-term investing and the belief that time in the market is more important than timing the market. Before we delve into our countdown, let's take a moment to appreciate the wisdom of John Bogle, the founder of Vanguard Group and creator of the first index fund. Bogle, a champion for individual investors, once said, "Time is your friend, impulse is your enemy. Take advantage of compound interest and don't be captivated by the siren song of the market." This quote underscores the importance of cost efficiency in investing. Bogle's philosophy encourages investors to focus on maintaining low costs, which is paramount in ensuring a higher share of returns. This principle has been a cornerstone of Vanguard's approach, offering low-cost index funds that allow investors to achieve broad market exposure without the high costs typically associated with active management. As we transition into our countdown, let's shed light on the wisdom of Howard Marks, the co-founder of Oaktree Capital Management, known for his insightful memos on investment strategies. Marks once said, "Risk control is invisible in good times but still essential, because good times can so easily turn into bad times." This quote signifies the importance of risk management in investing. Marks' philosophy encourages investors to always consider the potential downside of their investments. While one cannot completely eliminate risk, understanding and managing it is key to long-term investment success. His principle of cautious optimism and risk control has been a cornerstone of Oaktree's investment approach, emphasizing the importance of not losing money over simply making more. As we move forward in our countdown, let's explore the perspective of Carl Icahn, a billionaire investor and business tycoon known for his aggressive shareholder activism. Icahn once stated, "Some people get rich studying artificial intelligence. Me, I make money studying natural stupidity." This quote encapsulates Icahn's approach of capitalizing on the financial missteps of corporations. He became renowned for his role in pushing for changes in corporate management and strategy to increase shareholder value. His unique approach reminds us that in the world of investing, it's not just about understanding the market, but also about exploring the human factor, identifying mismanagement, and capitalizing on opportunities for improvement. Before we dive into our countdown, it's important to remember that the ideas and opinions expressed in these quotes reflect the views of their respective authors, not necessarily those of this channel. Always do your own research and consult with a financial advisor before making any financial decisions. Each of these quotes carries a wealth of experience and knowledge. They serve as reminders of the importance of individual research, the value of consultation with a financial advisor, and the potential impact these words can have on your motivation and perspective. So, as you navigate your financial journey, keep these quotes in mind. They might just provide the motivation and perspective you need to achieve your financial goals. Now, let's dive into the wisdom of some of the world's most successful investors. Welcome to our countdown of the top 10 influential quotes from successful financial investors. Each quote offers a unique insight into the mindset and strategies that have led these individuals to financial success. Let's kick off with "Opportunity is missed by most people because it is dressed in overalls and looks like work." Thomas Edison. The genius inventor reminds us that opportunities often come disguised as hard work. It's the willingness to roll up your sleeves and get your hands dirty that sets the successful apart. Next we have, "Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas." Paul Samuelson. The renowned economist emphasizes the importance of patience and the long-term mindset in investing. Success doesn't come overnight. It's a product of consistent, informed decisions over time. Third on our list is "An investment in knowledge pays the best interest." Benjamin Franklin. The founding father of the United States underscores the value of knowledge. Investing in your education and understanding will yield the highest returns in the long run. Our fourth quote is, "Don't tell me where your priorities are. Show me where you spend your money, and I'll tell you what they are." James W. Frick. The former vice president of Notre Dame University challenges us to reflect on our spending habits. They are a clear reflection of our priorities and values. Lastly, we have rich people have small TVs and big libraries, and poor people have small libraries and big TVs. Zig Ziglar. The legendary motivational speaker and author highlights the importance of continuous learning and growth. The wealthy invest in their minds, not material possessions. From these quotes, we can clearly see the importance of hard work, patience, education, and smart spending. Success isn't about getting rich quick. It's about consistent effort, investing in knowledge, and making informed financial decisions. It's about understanding the value of money and using it as a tool to achieve your goals. To round off our countdown, remember, wealth is not about having a lot of money, it's about having a lot of options. Chris Rock. The comedian and actor reminds us that the true value of wealth lies in the freedom and options it provides. Please note, the ideas and opinions expressed in these quotes reflect the views of their respective authors, not necessarily those of this channel. Always do your own research and consult with a financial advisor before making any financial decisions. As you embark on your journey towards financial success, keep these quotes in mind. They might just provide the motivation and perspective you need to achieve your financial goals. If you found value in this video, don't forget to show your support. You can do so by hitting the like button below and subscribing to our channel. These simple actions help ensure we can continue bringing you insightful content like this. We are committed to providing you with valuable insights from the world's most successful investors. So make sure to turn on notifications so you never miss our latest uploads. We appreciate your support and look forward to seeing you in the next video.